Good morning and welcome to the early bird. And here we're looking at the Dow Jones on a 2 hour chart. It's still a bit early to do this video, really. It's only sort of not even 5:30 yet, so there's still a fair bit of trading in the US to go. However, uh, it's is a little bit clearer now of what we're looking at here. We're looking on the 12,000 here, and this is for most indices as well in their own way. This particular pattern that we're looking at here is corrective. I thought in the early bird that we may be getting a triangle pattern, and that's why that extra text is here in terms of a wave 3 to here, an A and a B and a C to here, and then a D and an E, as triangles are in 5 waves, with each substructure 3 waves. So, but it doesn't really matter in terms for us in terms of trading the ASX 200, and what we're sort of logically considering is that most meetings, and particularly the one that we're focused on in Europe, will deliver positive results. It's not normally about the news itself, it's more about the sort of expectations of the event, but at least we can ride that momentum into the Friday. Monday may be another story, so if you're holding a lot of long positions on the Friday, for a Monday situation, then it's probably better to be safer than sorry, and trade less, even though you may make less. But what we're sort of considering on here is a wave 4 here and then a wave 5 up. So we'll be counting 5 waves up. So it would be something like the 1, the 2, the 3, the 4, and the 5. And we could stretch up to 12,500, but I won't worry about that yet. One of the main points here, of course, is price is in group 1, which is 100, 200, and 300, and that would be important if price finds support on top of group 1, the 12.3. And it takes a little bit of time to do that, unless we're going to see some sort of massive gap because of the Euro meeting. Then we would be looking for support on that. If support there is found, then we'll be looking further to here. And that could also put our local market at 4.5, by the way, which I mentioned sort of earlier in the week as well, now that we're developing support on 4.3, and we'll look at that in a moment. So, yeah, that's an A and a B and a C, and we'll push higher. It can be a D wave here and an E wave here. I've got the 1 there is up for 1 and back for 2 here and up for 3 that way. The D is for the D and the E there. So we could see a larger pattern, sort of triangle pattern unfold there. This is also the Dow as well. You can see that it's really starting to climb through here now on top of the 12.1, but then we've also got 10, 20, and 30 here, just for the sake of understanding group 1, because over here group 1 wasn't support, was it? So we wouldn't trade long. But over here we can start to see, well, the breakout's not as important, but not that important, but it's the retest, and we can see it climbing further. You can just visually, I'm a visual person, so I see it visually, but we all see things in different ways, so it's a little bit tricky, but we can see it, this was resistance and now it's support, so that's the buying point. Also, we can see that confirmed by the volume as well. We can see increased volume in this section here, and as that's moving down here, we see less volume moving down through here. So, and also through the correction there, sort of lower volume, but pushing sort of higher now. So, volume confirming price action, and this is also the same with all the other markets as well. The S&P 500 here. Haven't adjusted that wave count, but maybe I've got it on here. Doesn't really matter so much, but let's have a look at the Nasdaq. Okay, the Nasdaq's here as well. So this is a bit weaker in this terms here. So we've got wave 3 here. We've got the A, the B, the C, and either up for wave 1 and back for wave 2, or the D wave and the E wave here, and then a push up from this point here. The London market would be much the same as well. This is a bit better of a picture here in terms of things. So we've got the top of wave 3 here. so you can see the strong sort of move up through there. So then we've got this three-wave pattern here, and we're looking at that as an ABC, but I just want to keep the D wave here and the E wave here, and then push up from there. So, but we can certainly push up from here. And 56, as I mentioned before, and this is 56 has played a number in this market before in a very strong way. So it has meaning, and support on top of here would certainly create the upside that you're looking for here. If this is 5 waves up through here, this would be the third wave here, the fourth and the fifth, so there'd be an A and a B and a C here. So it very well may push up from above the 5572 there, and you can build a small position in there once the market opens again. Of course, won't wait for it to settle, or over here. But just be prepared that from this 5-wave structure up to here, we may be getting a pullback into the 530 area here, but it should stay above the 5.5 here. And this is the same with our local market being a little bit more sort of important as well. We if you've been watching the charts here, I didn't update the chart yesterday because there was no point. The market still had to, complete this leg down here because we had the A wave, the B wave in 3, and the C wave here. But that's done now, and it does appear that we've got a small, tiny 5-wave structure coming up through here. So that would be like a little wave 1 and a little wave 2 here. So on the opening, if everything is still fine in a couple of hours' time, nothing sort of extraordinary happens in the Dow Jones, and it's still sort of positive to the upside, then really want to be long from here, and we'll be looking to make new highs above here. But of course, always Elliot's one thing, but trading the levels, which comes back and intertwines with your money management, and bringing those two together makes for safer trading. So, being long here is one thing, then being long on once support is found on top of group 1, especially now that we've had this ABC correction. That's what we're looking for. We like to trade out of corrections, and Elliot can give a bit of science, more so than other traditional ways of viewing corrections. Elliot can add a bit of science to that. So anyway, developing support on here. Stops would need to go under group 2 here, 72 through here, but we should see a push up from here now, because this little pattern here on the 1-hour chart appears to be corrective and should push up through there. Okay, so just have a look at this in. Okay, this is the SPY once again. Here you can see this market across here being corrective, and you can see this. It hasn't got support here yet, has it? But it would like to, by the looks of it. So we'll see. This needs to, hit up here somewhere and find, and then find support down through here. But if support is found on top of, depending on what time the market, where the market closes and so forth. But if support is found on here, then you'll be looking to the upside. So you'd be looking for up for 1, back for 2, up for 1, ABC, back for 2. So you'd be looking for a building process through here, and you would build into that. Okay, the gold market seems to be on track in terms of we're looking at this market moving down through here, and in 5 waves, in terms of the 1, the 2, 5 waves in here for the 3rd, the 4th, and the 5th here. So we'll now see a rally come back in here. When I first seen this, writing about it this morning, it was on this bar here. So the 61.8 retracement level would be up at the 1740 here, I think I mentioned, but the 1750 here, obviously the critical point through here, and it's very normal to see a bounce off the 1750 here. Let's just see this bounce play out first, and any sort of downside through here. So the copper market is the important one for us, and for the Australian market, and for resource sector and also for the dollar as well. We're looking at this being a corrective pattern through here, and once it completes, and we feel that that may be the completion of it there, because whichever way we look at it, we can look at it as an A and a B and a C wave through here, or we can look at it in 5 waves up here and back in here. But as long as it stays above the 345, it's all about the 350, but under 345, and we'll have to be bearish on it. It can come down to the 347, which would be the normal thing for it. But all being well, we should see this push up, and we consider this as a positive bias being above the 350 there. So that's healthy for our market and the SPY and BHP and Rio and so forth. So that's good. The oil market is still positive as well. It's still above 100 here, and I'm kind of looking at this in terms of an A wave to here, a B wave to here, and a C wave to here. But we would need to see it push up through here, and I would expect it would do that in line with the indices, with the Dow Jones pushing up through there as well. So our target for the upside here in Elliott terms was around the 104. But let's just see what sort of support it finds on top of Group 1 here. Right, the currency markets. So this is the US dollar here, and the bottom line is that if this moves down, the euro will move up, the Australian dollar will move up, and that will be in line with US indices and indices in general. And that's kind of what we're looking at here, and that's what we're kind of expecting. So, yep, so we just basically expect this to move down. Now, at what point would we be wrong or right would be this market finding support on top of Group 1 here. Group 2 here, and especially on the 72 there. So it's still got some playing out to do here. It's not all sort of said and done just yet, and it may turn positive here, but for the meantime, which we're looking at, it's under the 72, and the Elliott counts to the downside. If that was reversed and it finds support on there, then we need to reassess what we're doing there. But in terms of the euro here, I think you need to look at the Elliott charts on the euro here. We're expecting a B wave to complete. I've just got a bigger picture here for this. Just bear with me a second. Okay, we're expecting that B wave to, this is a 2-hour chart here. If you've been following the Elliott charts, we're looking at a low to come in through here and a push higher through here. So in relation to this, we would need to see support on the Fibonacci number 34, so the 134. If support is found on that, that will obviously help the indices as well, and we'll see a push higher through here. So developing support on that 134 there, as we're seeing here, is what you'll be looking for. Right at the moment, it's resistance, but it feels, it wants to push up through there, but you need to have support there first to do that. So there's still a couple of hours trading on the US markets for that to occur. So that should create some sort of pattern there, and also be positive into the coming into the euro meetings, as well as news sort of leaks out through the wind as well. It's already started with France and Germany meeting and discussing things. So things are sort of coming out, and they'll come out more so and create that that positive momentum for the euro, and therefore for trade as well. And we'll see that show up in the indices as expected. And the Australian dollar as well to the upside here, very much sort of like the pattern we've got on the SPY. So we should see that push up from here now. So we'll be looking for wave 4 here and wave 5 to move up through here. Will it reach 105? Don't know, but let's just start counting the five-wave structure that we see moving up through here. And once again here, the 103 here is a top of group 1, so support on that is critical for any further upside here. The size of this correction here can be very helpful in terms of being a foundation and a base for the next trend. So in Wyckoff terms here, we would see the distance across here equal the upside there. So the 105 becomes the real target within that. If we can narrow down into this here to look at this situation here, we were talking yesterday. I think we're looking at this in terms of a line chart. If I bring that back there, that might jog the memory a little bit. So we're looking at this as the A wave down to here, the B wave to here, the C wave to here, but this is essentially just expanded now, so that's the trouble with corrections. So we've got the A wave to here, the B wave to here, and the C wave to here. So it's a bit more complete now. So we should see this push to the upside here, being from the 102 here. That's a nice support here. So depending on when you get this video and so forth, you'll either be working with group 1 here and looking for support on top of 102.30 as a retested support, or you may be up above the midpoint here, which wherever you are, whatever you're doing, you need to be able to recognize what support is, and the retest is important at that stage. We've also got GDP figures coming out at 11:30. They're supposed to be quite sort of balanced from last time, but the news sort of listening out there is that it will be positive, but that to me is a bit of a guessing game. You've got to be I don't know, it's not my specialty. My specialty would be using the 2-minute robo to catch any move there with orders already sitting there ready to catch any spikes, but that's that. But anyway, just be aware of that. You may want to trade less or trade more. Okay, so that's it really in a bit of a nutshell. This is BHP in the US here. We're kind of expecting, this market, this trend here to push basically up here somewhere. It may not get above the 80 there, but we'll see. But basically an A and a B and a C wave here, and normally the C wave would have some sort of relationship to the A wave. But when you're dealing with large numbers like 80 is a large whole number, it can certainly skew the wave count in this, and which brings me to CBA at $50. You'll need to be careful around that area there in terms of getting chopped up a little bit, but this trend up is got the momentum to the upside, and we'll be looking for another push through up here as well. Of course, you can break this down through here as well, from 72, then we've got 75 and 77, 72 and 78 will be a profit-taking number within here, so you can work that in there. The same with our local BHP and Rio as well. You'll be able to work with those levels closely, but the momentum is to the upside, and yeah, it's all good. So the other point that I need to make is that it's Wednesday. Wednesday normally creates the high for the week, even though that the high can come on Thursday as well, on the Thursday opening. But we're not really in normal set of circumstances, because we've got intervention of governments and central banks pulling strings, so things can get out of whack a little bit in terms of the normal flow of things. So it does make things a little bit sort of tricky, but I think that seeing the wave count on the US markets and the indices and the currencies having a fifth wave to push up, how far will that fifth wave go, how the market will react to news coming out Wednesday, Thursday and Friday, I don't know, but I can say that the wave count to the upside is positive, and the market's obviously taking the European meeting as a positive, at least by the rumour sell the fact type of thing, and that's how far and how we will run our trading on the ASX 200. So we will put out some more long trades today, and I wouldn't sort of overdo it because Thursday can open higher and then trade lower again. So we need to be sort of aware of that. But the European meeting may just cut that short. I just don't know. So prepare, if you're going to trade into the Euro meeting, then in the trading plan, you need to understand what risk that you're going to accommodate, and certainly don't overtrade, because the markets will always be there, always been going up and down, and there's no need to expose yourself to unnecessary risk. So you need to be looking for safe trades. And I do feel that the momentum, as long as the US markets stay above the 12,000, will be pushing further to the upside. Alrighty. I think that's that. I do need to mention about the options as well. That the options trading thing has sort of slid through my fingers. The costing on it was too expensive, so I for the amount of people that trade options, I can't. We haven't put up the price on our service for since we've started our service, and I don't particularly want to do that just because we need to add something. I'd rather skip that and keep costs within reason for all of us. So unfortunately, the option thing has slid through our fingers, and sorry about that, but that's life. Just a bit expensive. So, alrighty. Well, good morning and good luck.